Hi traders, Adam Ryan here with Optic Trading, and welcome back to another trading tips video. In this video, we're going to be talking about the daily loss limit. Should you use one in your trading? Should you not use one? What is the daily loss limit? How do you set one for you as an individual trader? We're going to cover all that in this video. So first off, what is the daily loss limit? The daily loss limit is a self-imposed daily loss limit, exactly what the name says. So you're going to stop trading at a certain loss. So let's say that you incur up to $1,000 of losses and your daily loss limit is $1,000 per day. At $1,000 of losses, you're going to stop trading. So a daily loss limit is great because it's going to help preserve capital. So most of the time, if you hit your daily loss limit, it's going to mean a couple of things. One of those things is that you're either out of sync with the market, you're trading poorly and you're making lots of mistakes, or the market environment's changing and you're just not understanding what's going on. So preserving capital, having a system where you say, hey, it's time to shut down and stop trading for the day, that's gonna really help your trading because it's gonna give you capital for the good days. So let's say that you don't have a loss limit and you have a poor trading day, you make lots of mistakes, the market environment changes, you don't adapt, you blow through half of your trading account, and then the next day you have an amazing day, your best day ever, but you're trading with half the size. You're not gonna make all that back. So you need to have a system in place that's gonna help you preserve capital, and that's exactly what the daily loss limit does. So how do you effectively set a daily loss limit? What is the best way to set one for you as an individual? Because there's a couple of things you got to take into consideration when setting a daily loss limit for yourself. Now, if you work for a proprietary trading firm, they're gonna set that for you, so you don't have any say, and it kind of sucks because they don't really care about what your expectancy is or you as an individual. They just care about, okay, it's our money, this is what I'm okay to risk on you, so this is your daily loss limit. So some traders, with their expectancy, they may not be able to trade for a firm because the daily loss limit is going to be too tight. They're not going to be able to realize the expectancy of their strategy because of that. So that's something you got to take into consideration when looking to work for a proprietary trading firm. So let's say that you're a retail trader, you're trading from home by yourself. How do you set an appropriate loss limit for the day? Well, first off, you need to look at expectancy. So if you're not familiar with how to find your expectancy, I'll leave a link in the description to a video I did on the reward to risk ratio where I go on talking about how to find your expectancy. So that will be a great resource for you if you're not familiar with how to find your expectancy. Now let's give a couple examples. So let's say, for example, that you're a trader and it's perfectly normal for you to have 3 losses in a row. With your expectancy, it's perfectly normal that you'd have 3 losses in a row before you start, making some good trades and realizing the expectancy of your strategy. Now let's say you're risking 1% per trade. Well, you don't want to have a daily loss limit of 3% because that's perfectly normal for you to have 3 losses in a row. So you'd really be cutting yourself short. So let's flip the switch here. Let's say you are a high performing trader and it's very odd that you'd see 3 losses in a row. Okay, well, if you're risking 1% just like the other trader, then having a drawdown of 4% would make perfect sense because then you'd be doing something wrong. This doesn't really happen. It's not normal. Something's up. I'm either trading wrong or the environment's changing. A 4% drawdown for me, that doesn't happen if you were that trader. So that's why that would be acceptable for you. You want to make sure it plays to your expectancy. Now, the next thing that goes hand in hand with expectancy is time to recover. So how much time is it going to take you to recover from hitting your daily loss limit? If it's going to take you 2 weeks to recover, then your daily loss limit is way too big. And we find that out by looking through our Excel spreadsheet and tracking all our days. What's the average you're making? Okay, so if you're averaging $100 per day and your daily loss limit is $5,000, it's going to take you forever to recover from that. So you don't want to do that. So if you are a high performing trader, you have a high expectancy, then you can get away with a daily loss limit that may take you, a couple days to recover, 4 days, because it happens so rarely. But if you're a beginning trader, you're just starting out, you're going to have a lot of losing days. You don't want to have a daily loss limit that's going to take more than a day or 2 to recover from. Because if you find yourself having to take 2 weeks to recover from a daily loss limit, that means you're going to have to trade bang on perfect for 2 weeks in order to make just back where you were before. So that's going to be a losing game for you. So time to recover is going to be very important when deciding what you should set for a daily loss limit. Now we know how to set the daily loss limit. Let's talk about what we do when it actually gets hit. Because a lot of traders, even traders at proprietary trading firms, for some reason they think that their daily loss limit gets hit, oop, I just go home or going out to lunch, you know, I can stop trading for the day. And no, you cannot stop trading for the day. Yes, I did say stop trading for the day, but that's stop trading live. You switch to sim, okay? Because the market is teaching you something every single day it's open. You can either take this as a learning experience and learn from it, or you can just shove it off and repeat the same mistakes forever. You gotta learn from this. So staying on sim is gonna be really beneficial for you, because yes, it's not the same as live, but you're gonna learn a lot more when you're in the market, even if it's just on sim. You're gonna learn more from being in the market on sim than you are from just watching it being flat. And obviously watching it being flat is a whole lot better than, you know, somebody who's going out to lunch. But trading on sim is gonna help you do very, very well if you are looking to improve your trading, especially if it's a changing environment or it's something happening that you're not understanding. You want to trade on that. Then as soon as you're done for the day, then you go to your journal, then you make your observations, you try to figure out where you went wrong, analyze everything, and that's how you improve your trading. So I hope you guys all start implementing the daily loss limit, and I hope you really enjoyed this video. If you guys did enjoy this video, be sure to give a thumbs up and like it, subscribe to the channel. Best of luck with your trading, and I'll see you in the next video.